Today's May 30th. This is the Investitute podcast after a nice long 3-day weekend, John. How was your weekend, Good?
Yeah, it was. Down in Michigan City, Indiana, and then over to Michigan itself to go over to a friend's house for a party on Saturday. It was great weather all the way around, really. I had a very restful weekend, Andrew.
Yeah, it's nice. But as you know, we're back to the grind, and I put out that we were going to ask some questions on Investitute on our board where most of our, I don't know if you're listening from outside, we have a service called Investitute, and in there, guys trade all day, and 3 guys all had pretty much the same concern. Lee Lesner, John Mordos, and Steve Crum. They all wanted to know about Goldman Sachs. And from what I can tell, one said +1. I don't think he was up +1. I think he just was saying, +1, like they say. And I think my guess is that most of these guys are short or want to be short. And then Mike Yamamoto, the moderator, says I'm good long term. What do you think of it? I'm not a Goldman Sachs person.
Long term, I like it. Short term, I like it. Today, I figure most of what we're seeing today, I think most of the listeners know, is a reaction to the protests about their investments in Venezuelan debt. Goldman, of course, bought I want to say, Andrew, $3 billion of Venezuelan debt. Now, that wasn't a fresh offering. So let's just back it up just that far. If it was a new offering, that's just like you go to a bank and the bank gives you money. So if it's a government offering, whether it's Venezuela, Argentina, or the U.S., knock on wood, we have better credit than those former two, investors decide how much return for the invested capital, and that's the interest rate on the bond. And that's, of course, preset by, the interest that they can round up for the sale of a bond. That's what you used to do, Andrew.
I know.
Rounding
I'm actually
up,
thinking about what the yield is on these things, and unfortunately, I haven't looked up what that yield is. You don't know, do you?
I do not.
I don't know either.
But knowing what you and I both know about Venezuela and the hell that has been, falling on those poor guys' heads.
2%.
How much?
It ain't 2, it ain't 3%.
Well, because it makes sense that you'd have to pay a lot to borrow money when you have a failed country where people are worried that they're not going to get paid. I mean, same thing was true in Puerto Rico, which, of course, is a protectorate of the United States.
Yeah, big difference.
And when they looked like, but because they've got a big brother that looks like it's going to back them up. When you're Venezuela and your former big brothers are Cuba and maybe a little Russia, you're not so happy when inflation is running crazy down there.
It's not a Brady
which
bond.
Means, right. People won't leave money in the bank, which is another reason your interest rates get so high. Same thing happened to Mexico in the 80s. If people won't leave money in the banks in the country, then they have to pay these enormous interest rates just for the cash that does remain in the banks. And then investors make that informed decision whether it's a good idea to take that money, that much higher interest rate, in exchange for the possibility that they might default and or not pay you back at all. So
what we tell
that's what's going on with Venezuelan debt. Goldman stepped in again. They didn't buy the fresh stuff. They were buying bonds that I believe were issued in 2014. But they were basically saying, because I think, again, all the investors know that bonds move in opposite direction of interest rates. If a bond's going down, interest rates are going up. If bonds are going up, interest rates are down.
Oh, so this is secondary debt. This is what, maybe somebody unloading some of their position and giving it to Goldman, let them take it over, and they sell it for pennies.
And probably selling it into the hole.
Oh yeah, for what, like
Goldman
30,
is pretty
40
good
cents
at,
on the dollar.
Exactly. Goldman's pretty good at doing deals like that. Now, that doesn't mean that they put a gun to anybody's head, but somebody that needed to unload $3 billion worth of bonds.
That's a big ticket.
Yep.
I'd like to be on the selling end of that.
Yeah, I would too.
Somewhere in between for a couple bases.
I imagine Goldman stands to make a fortune on it. But again,
on them paying it back.
Yep.
And maybe even the trade. I mean,
for those listening that aren't familiar with how this works, when you issue the bond, you get the money, and you agree to pay that interest rate. And your interest rate that you're paying on is the interest rate when the bond was issued. So let's say that the bond was issued and it had a 5% coupon or something like that, Andrew, in 2014. If that was the case, and the bonds have traded down hard since then, the effective yield to you, the owner now, is much higher.
Oh, yeah.
Because as Andrew said, you're buying it for, let's say 30 cents on the dollar. So it's really $9 billion worth of bonds that you're paying $3 billion for. That'd be an example of 30 cents on the dollar. Well, so you're factoring that into it to figure what is my return going to be on this if I get my money back. So you're not necessarily the same as the folks who would say, well, I'm just not going to lend you money unless you pay me 17%. Because
that's a new issue.
Yep, that would be on a new issue, not on a 2014 issue. That one is a problem of their own making in Venezuela. So that's why
that's
people
a whole
are protesting.
Other story.
Yep. And obviously, these rates could go significantly higher, depending on how much pressure is brought to bear and so forth. And then at some point, they try to renegotiate. They say, well, they'll threaten default, and then, like Argentina did, and then actually perhaps even default, don't make a payment. And that means, okay, technically now you're in default. Well, what can you do? Take the country? No. So generally, they can't access capital markets until they get their credit back in line, and they can't get their credit back in line just like a regular investor until they've paid off the debt. So that's where this could be, the vampire squid that is Goldman Sachs could be once again accused of feasting on somebody else's misfortune.
Hey guys, credit guys, a lot of money to analyze this kind of things, more than we can imagine, and they think a lot. I remember the guys on the bond floor used to sit back there and they used to crunch numbers for hours, and they were good. So I guess Goldman knows what they're doing.
So our guys on the Investitude site are wise to be noting this. But like I say and said at the top, I am bullish on them longer term, even short term, just not daily. I'm not bullish on them for the day. So could we see Goldman under this scenario ease a little further? Yeah, we could, but even if Goldman lost all $3 billion in this particular trade, this is not a make or break Goldman Sachs trade. That would be painful.
And if it works itself out, because they still have assets down there, they still have oil, right? They still got.
Oh yeah,
they still got stuff.
And you're buying it for pennies on the dollar for a reason. Your guys have done the numbers, and you think that even if they agree to a 25% haircut, meaning that they're only going to pay 75 cents back of the debt instead of $1 of the debt, if you were a buyer at 30, you just doubled your money. So that's the calculus that Andrew's talking about. And also, I wouldn't, with the whale in London, the London whale with Jamie Dimon and J.P. Morgan, they lost some money on those trades, obviously, billions of dollars, and it took the stock down for a couple days, but it was a screaming buy. I don't know that Goldman's eased enough that I would say it's a screaming buy on a down 4-day, Andrew, for the stock. But I do think that longer term, stock will be higher than where it is right now.
Okay. So we pretty much ate up all our podcast time on this one stock, unless you want to just throw one more out there.
Take a look at CSX. That's one that we did for unusual activity today. CSX, Charlie Sierra X-ray. The former head of CSX is now running United Airlines, Mr. Munoz. And CSX, we're seeing upside call buying in there. So watch that one, my friends.
Okay. Well, there you have it, folks. There's your Investitude podcast kind of Q&A or whatever. Just question.
Shoot us some questions. Post them up on either iTunes or YouTube, and you can subscribe. Get the podcast daily. Thanks for listening.